Hey traders, let's check out one of the big market moving events for today. It's going to be early this afternoon, UK time and European time. It's the monetary policy report from the ECB and the press conference that follows that. So that's always a market moving event. But at the moment, the ECB is actually in quite an interesting position. It's not quite the same as the Federal Reserve that we've been discussing in the past few videos, because actually the ECB is one of the only major central banks that's not looking to pull back on their ultra-loose monetary policy, at least not anytime soon. The other is the Bank of Japan, which announced yesterday that they expect to continue their loose policy even after the end of the pandemic. So on the other hand, we have the US Federal Reserve and the Bank of England, which are expected to begin tapering soon, and the Reserve Bank of Australia and the Bank of Canada have already started reducing their asset purchases. So earlier in the year, the Eurozone was lagging behind other major economies, but growth in the second quarter of this year was up 2%, and data so far seems to suggest that Q3 will also see further growth. In the PMI report last week, the IHS market said that another strong quarter-on-quarter rise in GDP is on the cards for the third quarter, and we're certainly on track for the Eurozone economy to be back at pre-pandemic levels by the end of the year, if not sooner. Now, if we look at inflation, inflation has also recovered in the Eurozone, with the latest August reading showing a decade high of 3%, which was up from 2.2% in July. In fact, the last time inflation rose this quickly was all the way back in 2011, which also happens to be the last time that the ECB raised interest rates. But raising interest rates is not something that we're expecting to see in today's meeting. And as we've heard time and time again from various central banks and central bankers, the factors behind this inflation gain are likely to be one-off transitory things like the rise in energy prices and supply bottlenecks. So one thing the ECB are no doubt worried about is that if they pull back policy support too quickly, that could negatively impact the longer-term inflation goal. It's this kind of balance that a lot of central banks have been complaining about or worried about, which is that they don't want to pull support too quickly, but also they don't want to leave it too late that things like inflation end up becoming a problem. Because if inflation does persist for some time, the Eurozone may end up seeing a drop in things like consumer spending, and that could undermine economic growth. It just becomes very expensive for people to survive and to live. So these factors will be adding pressure on the ECB, and in particular on coming to some sort of decision on their PEP, the Pandemic Emergency Purchase Program, and that's likely to be what's being discussed at this week's meeting. It's thought that they may reduce it from their 80 billion euros a month to 60 billion euros a month, but a final decision on the program probably won't come before December. Now, you may have noticed the ECB does have a few different asset purchase programs going on. There's PEP, which is the one that's in focus right now. As the name suggests, that one was there to help the economy through the COVID crisis. That means promoting economic growth and trying to achieve a 2% inflation goal. Then there's APP, which is simply Asset Purchase Program. And although it's a combination of some other programs, this one began back in 2014 and is usually just referred to as ongoing asset purchases. Now, the APP program has been tapered off over the years, at least up until the end of 2019, but then net purchases were restarted at 20 billion euros a month, and that was actually before the start of the pandemic, although we're not suggesting that they were front-running the pandemic in any way. Now, keep in mind that APP is separate from PEP, PEPP, although they are both asset purchase programs. But it's important to keep both in mind because Christine Lagarde has previously suggested that asset purchases from PEP could make the transition into APP. And if that happens, it may be perceived as tapering, but the purchases are still going to be ending up on the bank's balance sheet anyway. So PEP is actually due to end in March next year, so that's why we're expecting those discussions to begin very soon about what to do with it, maybe already now. So as I said before, it's currently running at 80 billion euros a month, and its objective was to promote economic growth and achieve 2% inflation, and it seems like those have been achieved, at least so far. Earlier in the year, the Delta variant was a bit of a concern. It was that risk that we had, but now over 70% of the EU has been vaccinated, which limits the risks, and as a result, restrictions and lockdowns, which destroy economic growth, now seem more unlikely unless new variants emerge that sort of change the picture. It's also expected that the ECB will upgrade their economic forecasts in this meeting, so for the remainder of this year and for next year as well. So this is another sign that tapering could be justified. And the ECB's systemic stress indicator, which measures financing conditions, is also showing that stress is around pre-pandemic levels now. So although it's not going to be a main factor, it may also be something that contributes to their decision making here. Now, if you've been following our videos about the tapering situation with the Federal Reserve in the US, then you'll know what we were looking for signs there about, like when they're going to be ending it and so on. And we're looking for similar clues here from the ECB. You know, what's the time horizon for tapering? What's going to happen with the ongoing purchase program? Unless something drastic happens beforehand, it seems unlikely that the PEP will be extended beyond the March cutoff date, so it seems all discussions now are going to be about when to end that, how to taper it. Unlike other major central banks though, they aren't going to be tapering to zero, and even if they don't transfer purchases over to APP, they could just increase purchases under the APP. So lots of questions to be answered in this meeting, and it will probably be a bit of a guessing game for a while like we've been seeing with the Federal Reserve, but it is likely that they'll reduce the PEP today, so keep an eye out for that. Remember, the markets are going to be moving quite heavily, particularly the euro, so if you're in a trade, be cautious, manage that risk. Have a great day. If you like this one, if you found it useful, hit the thumbs up button. Don't forget to subscribe if you haven't already, and I'll see you in the next one. Take care, guys. Have a great day.